We're currently seeing some short covering in gold coming back in following Yellen's testimony, where she raised doubts about inflation and growth. And we've seen on that back of that bond yields have stabilized after spiking high over the past couple of weeks. Also, dollar yen, which is a key driver for gold, is currently testing the 113 area. So these are the two main drivers for gold. Also, from the technical perspective, we did see a break last week below 12.15. We remember that we have a double top above a 12.95. When we then break the recent low, that raises the risk of an extension to the downside. That break on 12.15 did attract some additional short selling. Short selling generally has been on the rise now for the past few weeks. But the failure actually to extend to the downside, the fact we're holding above 1200 has for now attracted some short covering. I think just looking in the very short term, the short sellers are probably still in control here, but look out for the 1230 area. If you look at the chart, you can see we got we're seeing previous highs, we're seeing 200-day moving average, we're also seeing trend line converging on this spot here. So a break above 1230 I think will turn the gold market back to neutral. There are still the underlying risks. We have the uncertainty with the US presidency still hanging over the market. We also have North Korea, which hasn't gone away. So on that basis, the failure to extend the selling below 1215 has raised the potential for short covering, but really we need to make it back above 1230 before we can see the market back to neutral and potentially from there create a base from which we can move higher later on.
Okay. That's good.
Good.
That's fairly solid.